Ever wondered what Bitcoin halving is and how it affects the value of Bitcoin? Well, let's delve into it. Bitcoin halving is a programmed event in the Bitcoin protocol that plays a key role in the world of cryptocurrency. It occurs roughly every 4 years or after every 210,000 blocks have been mined. This event is often referred to as the halvening. But why halving? That's because the rewards that Bitcoin miners receive for adding new blocks to the blockchain are reduced by half during this event. Here's a bit of background. Bitcoin operates on a decentralized network, and this network relies on the work of miners. Miners validate transactions and add them to the blockchain. For their effort, they are rewarded with newly minted Bitcoins and transaction fees. Now, this is where halving comes into play. So, Bitcoin halving is essentially the event where the rewards that miners receive for mining new blocks get halved. So, how often does this Bitcoin halving occur, you might ask? Well, it's a recurring event happening approximately every 4 years or after every 210,000 blocks are mined. This design is no accident. In fact, it's a deliberate aspect of the Bitcoin protocol aimed at imitating the scarcity of precious metals like gold. Let's take a quick walk down memory lane. When Bitcoin was just a fledgling back in 2009, miners were rewarded with a whopping 50 Bitcoins for each block they mined. But then came the first halving in 2012, which slashed the reward down to 25 Bitcoins per block. Fast forward to 2016, the second halving reduced the reward further to just 12.5 Bitcoins. The most recent halving in May 2020 cut the reward down to a mere 6.25 Bitcoins. These halvings are more than just a reduction in rewards. They're a testament to the genius behind the Bitcoin protocol. By reducing the rate at which new Bitcoins are created, the protocol ensures that Bitcoin, much like gold, becomes increasingly difficult to mine over time. This inbuilt scarcity mechanism is one of the fundamental reasons behind Bitcoin's value in the marketplace. As you can see, the Bitcoin halving event is a key part of the Bitcoin protocol that occurs approximately every 4 years. But why does Bitcoin halving happen, you might ask? Well, the purpose of Bitcoin halving is twofold. First, it's designed to control inflation. By slowing down the rate at which new Bitcoins are created and enter the market, Bitcoin halving helps prevent the cryptocurrency from being devalued. This is a crucial aspect because unlike fiat currencies such as the US dollar or the euro, where the central bank can print more money at will, Bitcoin has a finite supply of 21 million. Secondly, Bitcoin halving promotes scarcity. As the rewards for mining new blocks are reduced, fewer Bitcoins are being created. This means that as time goes on, each Bitcoin becomes increasingly difficult to mine. This scarcity, in turn, can increase the perceived value of each Bitcoin. It's a bit like mining for gold. The more gold that is mined and circulated, the less gold there is left in the ground to discover. And the less gold there is to discover, the more valuable each nugget becomes. This built-in scarcity is by design. Satoshi Nakamoto, the mysterious creator of Bitcoin, intended for Bitcoin to mimic precious metals in this regard. As a result, Bitcoin is often referred to as digital gold. So Bitcoin halving serves as a deflationary mechanism, ensuring that the value of Bitcoin is preserved and potentially even increased over time. Bitcoin's scarcity, much like gold, is one of its key value propositions. What happens to the value of Bitcoin during and after a halving event, you may ask? Well, let's dive into that. The market impact of Bitcoin halving has been a topic of intense discussion and speculation among investors, traders, and crypto enthusiasts alike. As the event approaches, the anticipation of a reduced supply of new Bitcoins often leads to increased interest and demand. This is due to the fundamental economic principle of supply and demand. When supply decreases, while demand remains the same or increases, prices tend to rise. This has been the pattern observed in the past halving events. For instance, the first halving in 2012 was followed by a significant market rally. The same happened after the second halving in 2016. After the most recent halving in 2020, Bitcoin saw a dramatic rise, reaching unprecedented heights by the end of the year and into early 2021. However, it's crucial to tread with caution. While the historical patterns seem to indicate a correlation between halving events and significant increases in Bitcoin's price, past performance is not indicative of future results. The cryptocurrency market is highly volatile and influenced by a multitude of factors, including technological developments, regulatory changes, market manipulation, and macroeconomic trends, among others. Moreover, the increased attention Bitcoin receives during a halving can also lead to heightened volatility. The surge in demand can cause prices to spike, but if the expectations are not met, it could also lead to a sharp correction. So, it's important to understand that while Bitcoin halving has often been associated with a bullish market sentiment, it's not a guarantee for future price increases. It's always a good idea to do your own research, understand the risks involved, and make informed decisions when it comes to investing in Bitcoin or any other cryptocurrency. So, while Bitcoin halving has historically been associated with a bullish market sentiment, it's not a guarantee for future price increases. So, is the Bitcoin halving in 2024 an opportunity to buy more Bitcoin? To wrap up our discussion, it's essential to remember the key points. Bitcoin halving, an event that happens roughly every 4 years, is designed to control the supply of new Bitcoins entering the market, mimicking the scarcity of precious metals like gold. This event has historically generated a great deal of interest, and in some instances, has correlated with significant price increases. However, it's crucial to underscore that the crypto market is influenced by a myriad of factors, and past performance does not guarantee future results. Bitcoin halving is an intriguing aspect of the Bitcoin protocol, with potential market implications. Yet, whether it presents an opportunity to buy more Bitcoin is a decision that demands careful research and consideration. In the world of cryptocurrency, being well-informed is the best investment you can make.